Let me guess. You've blown your small Forex account again. Maybe it was $50, maybe 100. You promised yourself this time would be different. And now your balance is looking like a phone battery stuck at 5%. I've been there. And I can tell you right now, the number one reason small accounts die fast isn't your strategy, it's your lot size. You're simply risking too much per trade. If you've got a $100 account, risking 0.10 lots on XAUUSD is like trying to lift a car at the gym. You might feel strong for a second, but eventually you'll get crushed. Here's the rule I wish someone gave me when I started. Risk 1 to 2% of your account per trade. On a $100 account, that's $1 to $2 max. That means if your stop loss is 100 pips, your lot size should be 0.01. If your stop loss is 50 pips, you can go 0.02. That's it. Nothing more. Most new traders think, small lot size means small profits. But what small lot size really means is you get to keep trading tomorrow. And honestly, that's how you actually grow. Here's my challenge to you. The next 20 trades you take, stick to 1 to 2% risk, no matter how confident you feel. Forget doubling your account in a week. Focus on surviving the month. Do that and you'll see the difference. So, the exact lot size for your account, the one that keeps you in the game long enough to win it. Start small, trade smart, protect your account while it's your ticket to becoming a profitable trader. If you want to get more helpful tips like this on this channel, then do well to like this video and subscribe. Thank you for watching.